Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Hate paying taxes now? Just wait until you start withdrawing money from your IRA or 401k. I'm getting ready to explain the difference between tax preparation and tax planning and how we can possibly save you thousands of dollars in unnecessary taxes. Stay tuned.
Welcome to the only show in the country dedicated to helping savers worry less about money. The WorryFree Retirement with your host, five-time author and fiduciary, the money missionary himself, Tony Walker.
Welcome to the WorryFree Retirement. I am your host for the next 28 minutes or so, Tony Walker, and we've got a great show for you today. We're going to talk about the difference between tax preparation and tax planning. There's a huge difference. And once you learn the difference, hopefully we can save you literally thousands of dollars over your lifetime and unnecessary taxes, or at least sure make an attempt at it. Before we get started, though, I got to bring a little levity to the show. Gina in our office, up in the Louisville office, Gina does a great job. She's the Louisville office manager, does all of our media buying, just a great employee, but she's always bringing in, she said, Tony, I got another one. So she's at the age, her and her husband, that they get all these steak dinner invitations, which, as you know, we don't do the free steak dinner things. We do workshops on a quarterly basis, absolutely free. I always say we're not going to give you free food, but I'm going to give you all the free information you can stand. But this is a great one. This is apparently at a real nice restaurant in Louisville at Valari. I got to thinking about this, and I said, Gina, I ain't going to buy you no free steak dinner at Valari, nor anybody else that's a complete stranger. But I tell you what I will do. I will play the song Valari for you. Aaron, hit it. All right, enough of that. You know what? Americans are paying taxes needlessly to the IRS. In fact, a recent article estimated that nearly $1 billion, that's with a B, $1 billion is paid unnecessarily to the IRS in taxes. Now you might think, well, how does this happen, Tony? I mean, it's the same thing every year. Americans do this. They go file their taxes, try to get all this stuff done before April 15th. Again, it's called filing your taxes, but they ignore the one thing that could help them pay fewer taxes. We call this having a forward-looking tax strategy. Again, we got a fun-filled episode for you on the WorryFree Retirement, and I hope what you're realizing is we provide on this show straightforward advice for savers on how to make their money last longer in retirement. That's what the purpose of this show is. And when we get to taxes, most people don't realize that there is a huge difference between what we call a tax preparer, I've got one of those, I'll talk about Eddie in a minute, and tax planning, which is what we do. So let's kind of talk about tax preparation. You prepare your taxes. You take your W-2, your 1099s, all that stuff to your accountant. I have an accountant. He's a CPA. I've had him for over 30 years. Eddie. I'll just call him Eddie the CPA. He's a great accountant. He's very competent. He handles my personal income taxes for me and my wife, Susan. He handles the income taxes for both of my corporations, Walker Financial Services, Inc. and WorryFree, Inc. He also handles all the taxes for the Walker Family LLC, where we hold all our real estate. He does a great job of preparing my taxes for the past year and for the upcoming year. That's his job. The problem is Eddie's role, and he doesn't want this role, he's not trying to look ahead 10, 20, 30 years at my retirement and the taxes associated with that money. That's not what he wants to do. But that is what we do. In fact, we record this show on April 24th, 2018. Many of you just got through going through tax preparation, and you did the taxes for 2017. You may already be preparing for 2018. I have to pay estimates, for instance. That's preparation for the upcoming year. But when you think about it, that's kind of historical. It's already happened. There's not a lot you can do about that. Tax planning, what we do at Tony Walker Financial, is totally different. So you might say, well, how would you define tax planning, Tony? What's the difference between that and tax preparation? In tax planning, again, we are looking forward. We're trying to figure out. It's almost like, imagine I'm in a helicopter, right? You're riding down the road. You can't see what's ahead. You don't know what the detours are. You don't know if the bridge is out up ahead. I'm above that, and I'm looking ahead, trying to see what things we can do to avoid losing money and keeping more of your hard-earned money in your pocket. That's what we mean by looking forward. Now, if you're retired or retiring soon, you're very fortunate because you have more control. Listen closely. You have more control over the amount of taxes you're going to have to pay in the future than you think. So what we're going to do on today's show, we're going to reveal 4 tax strategies that could help you save hundreds, if not thousands of dollars. This will include the required minimum distributions at 70.5 and how to keep those from hijacking your retirement accounts. This includes, number 2, the power of what we call tax diversification. We're also going to talk about Roth IRAs and whether you should contribute to a Roth or possibly even convert existing pre-tax money to a Roth. And then finally, the 4th issue we're going to deal with is the taxation of Social Security. So let's get into the first step and realize that when we get into retirement planning, we're trying to decide what is the after-tax monthly income need that you have. You might say, well, what do you mean after-tax, Tony? Well, think about your paycheck. You might make $100,000 a year. Let's say that's your salary, right? You make $100,000, but then you look at your check and you say, hey, Tony, I'm only getting $5,000 a month. What happened to all that money? Well, a lot of that money was taxes. So the $100,000 would be the pre-tax income you made. The $5,000 a month would be the after-tax. So when we get into retirement, it's no different. We really don't care about gross income. Ultimately, we want to know is what is your after-tax budget? How much do you need to run your household after tax? That's really what we're talking about here. But the problem is many of you have been able to manage your household because you go work, you make money, you take the after-tax, you come home and you live on it. But now all of a sudden you're retired and there ain't no more paycheck coming in and nobody's automatically taking all these taxes out. So how do you do that? That's where we come in. We look at the IRAs, the Roth IRAs, the Social Securities, dividends, interest, etc. Our job as experts in tax planning is to try to figure out how to keep more of that money in your pocket by developing what we call a tax-efficient income strategy for your future. So let's start with number 1 here. The first tax strategy we're going to talk about is the issue of 70.5. What that means is when you turn age 70.5, that tax tumor that's buried within your 401k or IRA or 403b, the government's going to say, start taking money out because we want our money. That's what it means. It's called the required minimum distribution. And regardless of how much money you've got, it doesn't matter. You have to start taking money out of your retirement accounts at age 70.5. Problem is, if you do it improperly or take out too much money or too little, some of that money gets hijacked in the way of taxes and additional excise taxes. So if you hate paying taxes now, just wait till you start having to draw out money when you get to this magical age of 70.5. You can't ignore the fact that you have to take this money out. And in fact, if you goof up and you don't take out enough, the penalty tax is 50% of what the distribution would have been. You could have a 50% tax problem. So again, this is really, really important stuff that you get this right. RMDs are clearly misunderstood. Most people don't understand them. Most advisors really don't know how to do planning around them. And that's why, that's why when we even say, hey, if you're in your 50s or 60s, you need to get a game plan for your RMD. You don't wait till you're 70 and you got 6 months to go. You might be saying, well, Tony, that can't help me. I'm already 75. I can't do any planning around my RMD. Of course you can. There's always things we can do to maximize the distributions that are coming out. So again, regardless of your age, if you have a 401k or IRA, 403b, we need to help sit down and go over a game plan to prepare and plan for 70.5. For instance, last night at a Louisville workshop we conducted, a gentleman, he said, Tony, I'm 56 and I've got a lot of money in my 401k. And we were talking about this whole 70.5 thing. And he said, not only am I worried about risk, but I'm worried about this tax tumor you keep talking about. So what I'm gathering, if I keep putting money into my 401k and maxing it out like everybody's told me to do, aren't I going to have potentially more taxes down the road? And I said, maybe. But it was a great question. At least at age 56, he's thinking about it. So that's why we need to work on the 70.5 distribution issue now, whether you're already retired or thinking about retiring, we need to develop a strategy, and we can help you do that. The second tax planning strategy that most people ignore is something I like to call tax diversification. Now, I've been teaching this concept for years, long before a lot of people even thought about tax diversification. In fact, Aaron, let's put up a chart that I use, and it explains the 4 different types of taxes. Now, in the essence of time, I'm not going to go through all these, but as you can see, there's all kinds of ways, as we like to say, to skin the proverbial tax cat. There's all kinds of issues that you might want to come up with and think about. The problem is, while we tend to try to diversify our investments, diversification simply means we try not to have all our eggs in one basket. For investments, let's take that as an example. You might have some money in stocks, right, because you want it to grow. Well, most people don't have 100% of their money in stocks. That's not diversified because they're worried if the market crashes, right, as a lack of being diversified, you lose all your money. So to diversify, you might buy some bonds. Sometimes bonds are a good hedge, and they're different than stocks. They react differently. You might buy an annuity to hedge against the risk. Again, those are examples of diversification. So what do we mean by tax diversification? It's the same concept. What we're finding is most people have put all of their money in the proverbial 401k basket. We call that the pre-tax basket. Problem is, when you retire, 100% of that income, 100%, when you pull it out, is subject to taxes. I mean, when you think about it, wouldn't it be nice to maybe have something that's tax-free? Wouldn't it be nice to have something that maybe is tax-deferred? Maybe we're working on different tax strategies with what we call compounding interest and things like this. This is the kind of thing I can sit down and go over with you. But I can assure you, most of you are probably not tax diversified, and it is very important in order to create a tax-efficient strategy. So kind of keep that chart in mind, and remember, when we meet, we will be talking about ways to diversify not only your investments, which is very important, but also to diversify your taxes. So here's what I recommend. Why don't we go through a tax analysis? It's simple to do. It's absolutely free. And what we'll do is see how much we can possibly save you in taxes. There's no sales pitch. We don't try to sell you a bunch of products. To take advantage of this, give us a call at 877-499-WALK, 877-499-WALK, or go to TonyWalkerFinancial.com, click on the Let's Get Started, and be sure you tell us that you want to emphasize tax diversification in your planning. All right, when we come back, I'm going to get to number 3. Again, we're covering 4 ways you can reduce taxes on your money. And we're going to be talking about something that's very confusing to a lot of people, and that's the Roth IRA. The Roth IRA. Let me get situated, get ready for the next segment. We'll take a quick break. You're watching the Worry-Free Retirement. I'll be right back. So there you are watching the Worry-Free Retirement and have an interest in our process. So you go to TonyWalkerFinancial.com and you click on the Let's Get Started button. You say, now what? Well, first of all the information you provide us is strictly confidential. Only one of our full-time employees will see this information and contact you immediately to confirm your submission of the information you've sent and to schedule a time to see us. Shortly after setting up your first appointment, you will receive a starter kit for you to complete to bring to that first appointment meeting. Now, during our 30-minute time together, we will clarify your vision, review all of your documents, and then schedule a second appointment so that we can provide your free assessment. During the second appointment, you'll have a chance to review the assessment. We will answer any questions you have, and then you can take that assessment for review, again, at absolutely no cost or obligation to you. Of course, if you wish to move forward with any of our recommendations, we will set up another appointment and handle all the moving of the money from your current brokerage accounts, 401ks, or other institutions into our worry-free retirement process. It really is that simple. So what are you waiting for? If you're retired, nearing retirement, maybe have a 401k or lump sum pension, or recently received an inheritance or other lump sum amount of money, go to TonyWalkerFinancial.com and let's get started today. Welcome back to the Worry-Free Retirement. Speaking of last night's workshop, we had another gentleman. By the way, I stay around to answer questions. I tell people tell me that they go to some of these seminars, and after they do their dog and pony show, they hightail it out of there, and they can't even ask any questions of the presenter. We always stay around to answer any questions. And here was the question, Tony, what is the difference between my 401k pre-tax and this Roth IRA you're talking about? And I described it, I use this same analogy in my book, Don't Follow the Herd, but I describe it as a parking garage. So let's kind of use this illustration and maybe this will help. So imagine that I'm driving into downtown Louisville or Bowling Green, Kentucky or whatever, and I've never been to a large city or any place that's had a parking garage. So I don't know anything about parking garages, and I just see this huge sign that says park here. So I pull up to the gate, and there's a gate. I push this button and I get a ticket and the gate opens. And I think, hey, I don't even have to pay. This is great. So I pull into the parking garage. I spend the day shopping or whatever business I have in downtown. I come back and find my car, excited that I've enjoyed free parking all this time. Around, you know how you have to go round and round to exit the parking garage. So I finally come to the end of the parking garage exit, and there's another gate with a man in a booth. So I stop and I look at the man in the booth and I say, hey, what's going on there? And he says, I need to see that ticket. And I hand him the ticket and I look kind of at him funny and ask why. And he goes, well, I want to see how long you've been in here. And I say, why do you want to know that? And he looks at me funny and he goes, well, it's very simple. The longer you stay, the more you pay. And folks, it's no different than a 401k or any pre-tax instrument. The longer you leave the money in there, the more you fund it. When you leave the parking garage, you're going to pay taxes. And the longer you've been in there, more than likely, the more the taxes. So then I leave the parking garage and I think, well, that wasn't that great of a deal. I wished I'd known I had all these payments and all these fees and taxes when I left the garage. I'm not going to make that mistake again. So I go back to Louisville or Bowling Green the next day. I'm trying to find another parking garage. There's another one, a new one. It says park here. So I pull in. And this one's different though. When I enter this parking garage, there's a gentleman standing there in a booth with the gate, and he says, hey, how's it going? I say, hey, what's up? I'm here to get my ticket to park. And he goes, oh, no ticket necessary. And I say, well, how's this work? And he says, you give me $20 now to park here. And I say, $20? That seems kind of high. I got to pay it up front? And he says, yeah, but this parking garage is different than the one down the street. And I go, well, how so? And he says, this parking garage, once you pay the $20, you can stay in here and park here as long as you want. And here's the beauty. When you leave, there's no additional charges. So what I just described there is a Roth IRA. So with a Roth IRA, you pay the taxes up front, but you don't ever pay them again. And you say, well, Tony, how do I fund a Roth IRA? Well, assuming you don't make too much money, there are limits actually, as crazy as that sounds, there are limits. But what you can do is, and we can help you set these Roths up, you can either fund it now up to $5,500 a year or $6,500 a year. So again, you would pay the taxes now, we would set you up an investment account, and you would fund it, but when you take it out down the road, there's never a tax on it, with some stipulations, of course. But let's assume, for the most part, it's tax-free. Or there's another little trick called a Roth conversion. Now, how does a Roth conversion work? Well, it's a pretty good idea. It works in some situations, and we can help you with this. But what you do is you take an existing IRA or 401k, and you convert that. You basically tell the government, hey, I want to move over to that other parking garage. I want to get out of this pre-tax garage and move $50,000, let's say, over to the tax-free garage. How do I do that? Well, basically, they're going to tax the money now. So your $50,000 would go on your tax return. You would pay the tax. But the beauty of that is, listen closely, that money, as it grows, even if it grows to $200,000 one day, when you take it out, zero taxes. Another good planning aspect of a Roth is you don't have to take any money out when you turn 70 and a half. And then finally, one of my favorites, when you die, not if you die, when you die, your kids or spouse or whoever inherits that Roth IRA does not have to pay taxes. Remember, with a pre-tax account, a 401k, etc., in most cases, when that money goes to your beneficiaries, they too are stuck with the tax tumor. It's a huge, huge deal. So yes, a Roth IRA may be for you. The only way to know that is to meet with us in person to find out. All right, the final point to consider with our 4 tax planning points is Social Security. Most people have no clue how Social Security works in terms of taxation. It has its own tax bracket. In fact, Aaron, let's throw up this full screen graphic to show you this. This was a chart we worked on. And as you can tell, your Social Security, depending on your other income, we can help you with this, could be taxed as high as 85%. Now, what we mean by that is 85% of the Social Security benefit would have to go on your tax return for calculation purposes. Now, think about this. If there was a way to not pay any taxes on your Social Security, wouldn't you want to know about it? I mean, you just want to needlessly pay extra money? Well, many of you are, and you don't realize that there are sometimes things we can do to minimize the taxes on your Social Security. Incidentally, I point out Lisa in our office, in our Bowling Green office, if you ever have any Social Security questions, she is certified in Social Security planning. We have a free service. We don't mind doing a Social Security analysis. Be happy to do that. To take advantage of this free offer, all you do is email Lisa at TonyWalkerFinancial.com. That's Lisa at TonyWalkerFinancial.com. Now, keep in mind, when we get into Social Security strategies, everybody's situation is so unique. There is no one-size-fits-all. There's no traditional way of looking at Social Security. Sometimes it's good to take it early. Sometimes it's good to take it late. Again, the only way to know that is to go through a planning session with myself. Now, again, if you do want the Social Security analysis, here's what you'll get. You'll get the precise timing for your situation, when to take benefits, when to start those benefits. You will also learn how to better coordinate those benefits with your spouse. The third thing you'll get is the impact of Social Security on your Medicare premiums. Social Security can affect how much you have to pay in Medicare. And then finally, as we said, the Social Security benefits in terms of taxation of your other assets as it relates to the Social Security payments. So again, there's a lot of planning strategies we can get involved in when we talk about tax planning. I hope what you've learned from this program is tax preparation, what your accountant's doing, is very, very necessary. Tax planning takes a whole different type of expertise, one that we at Tony Walker Financial feel very competent in. By the way, we got a few minutes left. We're going to talk about the Bible and what it has to say about money, but more specifically, you're not going to believe this, what it has to say about taxes. Yes, it talks about taxes in the Bible. I really got to get a cup of coffee before I get into this one. I'll be right back.
All right, Tony, I just heard you mention about the WorryFree Retirement, and I've heard that many times from you. You've written books about it, you speak about it when I hear you on television, but I really don't know much about what your process is. Would you tell me what the WorryFree Retirement is about?
Yeah, and the whole concept of worry, that's a biblical reference for me. You know, I worry too. I'm not one of these people that sits around and says I never worry. I do, but it's not a good thing to worry. Worry, if you have faith in God, you really shouldn't be worried about anything, technically, although we still worry. So that's part of it too. I think it's hard to enjoy life when you're worried. Now, I can't help people with all their worries, but I know a lot about money. I can help them in many cases with their financial worries. So what I decided to do was build this process around the assumption that people are worried. And for people that are worried about money, my job is to help them. So in this process, what I've done is I've created 5 steps. And these 5 steps, Marge, can be used for anything. But the first thing we do in the Worry-Free Retirement process is we start by clarifying your vision. And then we go to an assessment, and we're going to talk about those in more detail. Then we go to what I call a commitment, committing to that vision and that assessment to do better. Then we get to the implementation, and then we get to monitor your progress. So this whole concept is built around worry, but it's also built around this premise that we can help you with your worries so that you can use and enjoy the money, which to me, that's what it's all about.
Are you retired or retiring soon? Can you afford for your money to take a hit with the stock market being so volatile these days? Nobody can time the market, but having a retirement game plan with Tony Walker Financial gives you peace of mind and sleep insurance. Learn how to prevent losses in your retirement accounts and plan your retirement around an income you can never outlive. Log on to TonyWalkerFinancial.com today to schedule a personal meeting with Tony to secure your hard-earned money. That's TonyWalkerFinancial.com.
All right, good cup of coffee. Hope you're enjoying today's show. And we are talking about taxes. And you might say, oh, gosh, Tony, surely the Bible doesn't deal with IRAs, Social Security, required minimum distributions. No, but it actually speaks to taxes. And it does reveal that over time, way back in history, man has had to govern others through the use of taxes. Folks, societies have to have taxes. And I hate taxes as much as you do, but it's just a part of life. And they existed, yes, way back in time. In fact, it's interesting, if we turn to a very familiar passage in 1 Samuel, let's go there, Aaron, 17:25. We know this little story of David, the shepherd boy, and Israel's faced with this Philistine by the name of Goliath. Nobody wants to mess with Goliath. And all the grown men, the soldiers of the Israeli army, are sitting there, saying, what are we going to do? In fact, they're so afraid that they say the following: do you see how this man keeps coming out? They're referring to Goliath. He comes out to defy Israel. Listen to the proposition offered by the men who say, whoever kills Goliath, here's what they say. They say, the king will give great wealth to the man who kills Goliath. Okay, I'm open for that. You got my attention. He will also give him his daughter in marriage, depending on her looks. That doesn't sound bad. But look at the last one. And will exempt his family from taxes in Israel. So there you have it, folks. Thousands of years ago, taxes were a big deal. Must have been pretty high if they threw that in there. And they were fighting a giant to say, hey, if I can get out of taxes, I think I'll go fight this giant. Paul reminds people in Romans 13:7, he says of the following: give to everyone what you owe them. All right, what Paul's saying is, you're going to owe money to people in some point in time. And he even says it, here we go, if you owe taxes, guess what we got to do? We got to run from them. We got to be shady. We got to cheat the government. No, what he says is you got to pay them. If revenue, then revenue. If respect, then respect. And we pay our taxes legally, obviously, is what we're talking about. We pay our taxes to honor God. This is how society has to function. So you see, folks, here's my take on taxes. You're going to have to pay something in taxes. Taxes in and of themselves are not evil. But we got to remember something here. The idea of not taking advantage of the laws that allow us to save on taxes is not good stewardship, all right? As a famous Judge Learned Hand once said, the law does not require one to pay more in taxes than the law requires. A great saying. So yes, it is godly to pay taxes, but it is not required to overpay your taxes. Either way, folks, that's certainly biblical. Well, how about you? You may be sitting there saying, Tony, I don't know about these biblical taxes and what you're talking about, but I am tired of paying all these taxes. Is there something legally I can do to try to minimize my taxes? Well, of course there can't. There's something we can do, but you got to meet. You got to allow us to meet in person to go through your specific situation to see how we can plan to reduce taxes in the future. Take advantage of our free offer to meet. We can meet with you in either our Bowling Green or Louisville, Kentucky offices. It's absolutely free. All you got to do is go to TonyWalkerFinancial.com, click on the Let's Get Started button, and we'll make that happen real soon. Well, I hope you've enjoyed today's program. I've always enjoyed being with you, and I look forward to next week. You remember, though, between now and then, if all else fails, you be worry-free. Make it a good one.
Thank you for watching the Worry-Free Retirement with Tony Walker. If you need a safe and simple game plan for your retirement, log on to TonyWalkerFinancial.com and schedule a free, no-obligation meeting with Tony.